Good afternoon, this is Rich Nelson with Allendale covering the wrap-up comments here. Today is January 25th. Looks like as far as outside markets, kind of a mixed affair. We did see the U.S. dollar a little higher this morning on concerns that Greece might not get this debt deal taken care of here. But U.S. dollar did drop by the end of the day. Last trade right now is 24 lower on the U.S. dollar index. We do see that crude is up 72, and gold's having a very strong day, up 38 here for the day. So the outside market influence did turn a little positive here about mid-session here for grains. As far as grain news, we did see, of course, the overall trade still trying to price in this idea of potential Russian grain export tariff here. At this point, we have one group, Sov Econ, suggesting that maybe by April, we actually will reach the Russian government's target for exports, and if we see anything past that, that they may actually enact those type of Russian grain tariffs. As far as Allendale, we do not expect any type of announcement from the Russian government on this issue for weeks. You're probably going to look at maybe a 4 to 6 week period before we can expect anything coming out of the Russian government on this issue. So keep in mind, we could have a slight shortfall from the heavy feed wheat exports maybe in that month of April and May. Keep in mind the new Russian crop year starts June. So we'd have about maybe a 2-month lag as far as potential bearish influence from these very heavy Russian feed wheat exports. While that has given us a little higher trade here today, and also we can point out that ethanol production released this morning was also good. 934,000 barrels per day last week. That was a little lower than the previous week and 941,000 barrels. Now keep in mind, ethanol production will continue to fall in the coming weeks. The only thing we have to watch for is comparison against last year. And so far, we're still running ethanol production at levels higher than last year. In fact, year-to-date is about 3.0% higher. We say this is important because USDA is still suggesting that ethanol production will end the year actually a little bit lower than last year. So this big drop that we're all expecting to happen in ethanol production, well, it really hasn't happened just yet. It will happen, but so far it has not yet. So we do have a couple positive things to speak of. The Russian grain export speculation. Second thing, the ethanol production numbers here today. So we have those two good factors. But we did have this prices today at least kind of contained. We did see corn up 4 1/4, beans actually down 6.5 cents, and wheat up 7 3/4. So we didn't have another day of follow-through type of 10-cent and higher type of gains. We can point out that there are some changing expectations for Argentina's weather. The fact that we did get some good rains lined up back on Monday and early Tuesday for Argentina, and also for next week. For that Monday-Tuesday system that's coming next week, that has slowly been upped here as the days go on. Our current talk right now is 1/2 inch to 1 inch for this Monday-Tuesday system for next week for Argentina. So maybe there are some changing perceptions here that this Argentina drought situation, which has caused irreversible damage to corn, may actually not be that damaging to soybeans. So that's one thing to speak of. Also, we did find it very interesting either that this afternoon, after the Fed announced no change in interest rates, during Ben Bernanke's press conference, he did mention commodity costs, and he was mentioning this as they related to inflation. They look for a very mild inflation rate, right around 2% or so, and Ben Bernanke did mention one of the prime reasons for this well-controlled inflation was their estimate that commodity prices would be well controlled over the next 2 years. That's the best way you're going to hear him saying commodity prices will be steady, if not actually lower, over the next couple of years. So keep that in mind as related to commodity investment here, as far as the big picture. As far as livestock today, kind of a mixed trade overall. We did see cattle have some higher trade on the overnight electronic session, but the April contract itself closed unchanged for the day. We did see wholesale beef prices, we call them box beef prices, up 97 cents for select and up $1.12 up 97 for choice and up $1 here, up $1.12 for select. So we did see higher wholesale beef prices, and yet futures did not rise. Well, what's going on here? These higher wholesale beef prices are related to this packer cutbacks and kills. For the week right now, packers have dropped the kill 43,000 head compared to last week in the same period. This is about 3% lower here. So we do have packers cutting back kills. that is supporting wholesale beef, but the next step we have to watch for is whether this does keep cash cattle prices steady here in the near term. Keep in mind, Allendale is only neutral to prices for the February and April contract. We feel that both those contracts are very well valued right now. Our big bullish viewpoint for Allendale is still centered in the second half of the year here for cattle. As far as hog prices, up 37 cents here today on the February contract, or on the April contract, I should note. We've got to keep in mind here, though, that this market is kind of changing some perceptions right now as far as the short-term cash markets. Wholesale pork prices have been kind of sloppy here, if not actually stayed lower in the last few days, and we are seeing some mixed trades show up on cash hog prices. This morning's AM run for Iowa and Minnesota was down about 73 cents for free market negotiated hogs. So perhaps we're going to see some stabilization as far as hog prices over the next few days. So we've got a lot of things going on here, a lot of exciting activity here, and of course we are all making all kinds of great 2012 marketing plans as far as both grain and livestock producers. For you guys who have not gotten your plans yet in place, feel free to give Allendale a call here. We've got some terrific ideas to share with you guys, and we'd be happy to help you out. Of course, our advice is free of charge. We certainly hope that you do work with us and do work with us and your banker as a whole unit and getting some great 2012 marketing plans in place. So let's take a look at this and get serious about marketing for 2012 now. You can give us a call here at 1-800-262-7538. We'd be happy to help you out from start to finish and find a plan that works for you and your risk profile. Once again, that's 1-800-262-7538. This is Rich Nelson. Have a good trading day and a good trading week.